Baby boomers in Australia hold a dominant position in home ownership, benefiting from past economic conditions and favourable market accessibility. But as the boomers age, a significant transfer of wealth is expected in the coming days. That's already, or decades I should say, that's already underway. So how could this reshape financial dynamics for the younger generations, those trying to get into the market? Anthony Roddy is from MortgageWorks and he joins us now. Good to see you.
Thanks for having me, Andrew.
Of course, this is one of the key topics in Australia, particularly as we head into an election, affordable housing. Yeah. And part of that issue is that baby boomers, a lot of them aren't moving because in fact, finding it, the costs associated with move are difficult. So what are the trends you're seeing at the moment?
Well, that's exactly the issue we're looking at today. So as we know, 25% of Australia's populations fit into that age demographic of baby boomer, so between 60 and 80 years of age. But in terms of private wealth assets held, $11 trillion worth of private wealth in this country, they're actually overrepresented in that category. They own 53.5% of privately held assets in this country. Now, we know that a large percentage of that wealth is obviously in superannuation, but it's also tied up in the family home. So you may see that transfer take place and you may see people moving over the coming decades, I'd suggest.
Because you talk about that demographic of baby boomers, they're, if not already, they're on the cusp of retirement. So they're looking at downsizing. Perhaps the kids have left home. But as I alluded to there earlier, what about these costs associated with moving, particularly in terms of stamp duty? That's
the primary discussion we're having. Not only transfer costs like stamp duty or selling costs, paying a real estate agent, but the financial products are really limited. None of the big banks really want to play in this space because the cost of writing a loan effectively is all in the origination. So if they know that you're intending to buy a smaller property, they fund the loan and then you pay out the loan in 2 months' time when you sell your large family home. They won't get their cost of origination back. So we're seeing private lenders come into this space. And again, they have to cover the cost of their origination as well, and it's usually by way of a sort of a large one-off establishment fee and or higher interest rates. So it's a tricky time for baby boomers, the downsizing question around timing as well.
So is there an answer to that particular issue as far as the lenders are concerned?
I think as time goes on, well, the current scenario is that they just have to pay the price. That's effectively it. I think as time goes on, particularly some of the unique scenarios I'm seeing where people have deteriorating health conditions and they've got a longer term time frame for buying and selling, but they don't know when they'll have to move imminently. There's not a long-term product. These bridging type products are only sort of 3 to 24 months in tenure. So there'll probably be a requirement for a longer term product, I'd suggest.
So what are the consequences then for the younger generations, the first home buyers that are trying to get into the market? And we know stock levels are so extremely low in Australia. I mean, there is a massive housing shortage.
So, I mean, firstly, it will obviously probably be quite fortuitous for the beneficiaries of those estates. You'd expect that transfer of wealth, and we've already been hearing about the bank of mum and dad for probably the last decade. You know, it's played a big factor in housing prices. And so you'd expect that transfer of wealth to continue, and keep in mind 80% of baby boomers own their home, so it's a big statistic. It's far more significant than any other age bracket. So you'd expect that transfer of wealth to go with their beneficiaries. Now, if the beneficiaries sell, which is the most common scenario we see, particularly if there's more than one sibling, you would expect that to be an opportunity for first home buyers or upsizers that may not have had that assistance on the way through. In theory, and theory quite often doesn't play out, you would expect supply to increase over that 10 to 20 year window. So,
and we're not seeing that?
Not currently, but I do expect the conversations are becoming more common for me now, I would say, about the downsizer conversation. And I wasn't seeing it 5 years ago, so we shall see.
Now, of course, the other issue afoot is interest rates, which has always dominated as far as the Australian housing market is concerned. The RBA has finally begun its cutting cycle. Are we seeing an effect now translate?
It's probably the most common question I get every day, and I would say that I would summarise that the biggest impact has been on existing borrowers. So the conversations that I'm having are, has my bank passed it on? When does it come into effect? When do my repayments go down effectively? the conversations haven't been as common from would-be borrowers. And when you look at the mechanics of it, one interest rate cut in a borrowing capacity calculation, it doesn't make a major difference. And of course, it's a big difference for someone who might have just seen 13 rate hikes to their monthly budget. It's a very exciting time to start to get some relief. But for someone who was budgeting a month ago to spend a certain amount, seeing one rate cut, in terms of affordability, it doesn't make a major difference, I'm finding as well. So another 2 or 3 might, definitely.
Well, but then of course it affects sentiment, and you may well see property prices rise as a result. So it defeats the purposes, particularly as far as the first home buyers are concerned.
Yeah, it's on that topic of first home buyers. I mean, we've seen first home buyer participation rates decrease from 2021. The first new loan commitments were at 31% for first home buyers, and it's dropped down to 19%. So it's a third decrease in a 4-year window. And in theory, state and federal government support has never been higher with the programs they're running. But the reality is, it's a sad state of affairs for first home buyers.
So, what are you seeing? Actually, people giving up on the great Australian dream?
I'm in a role where people are coming to me because they want to partake in that dream. So I'm not necessarily seeing it on a daily basis. But obviously, the stats they don't look good. Presumably, people are. Yeah.
And how competitive is the lending space at the moment, given we are starting to see those rates come off?
Definitely. It is quite competitive amongst the majors. There's always, and obviously second-tier lenders, even non-bank lenders in that space, they've got some, there's a lot of competition in terms of pricing. Arguably the lenders pulled back their discretion on home loans late last year and early this year, probably in anticipation that they would have to pass on the full cut from PR exercise. So, we'll see what transpires this year in terms of competition, but yeah.